Hi, Larry Gaines, Power Cycle Trading. In this video, I'm going to show you how to spot a market bottom for oil. But what we're going to do here is two things I like to look at. First is what we call a front-to-back crude oil spread or timing spread. So what this tells you is basically the true overall kind of fundamentals of the market for oil. So this is the WTI January contract minus the WTI April contract. So what we're seeing here is that the January contract is below April. So I'll show you this side by side so you can see it on a chart. So we call this contango. And you can see it's getting deeper. See the negative is down to 55 cents under for that strip or that 4-month spread. Okay, so you can see here that the January crude is about 47 cents below April. So here's what it looks like if you just put it chart to chart. So here's the April WTI, okay, so you can see it's trading down here at 61.95, and then you look over to the April contract and it's trading at 62.41. So it's over. So the spot month is weaker. So this shows you the kind of the structure of the market's definitely weaker for the spot month versus, the forward months. And so that's what we call contango. Now, that's one thing. So once this turns though, that's an indication that we're potentially looking at a swing low or a cycle low possibly for the oil market. But the next thing I want to look at is my directional indicator. So let's take a look at those. So if you look here at WTI, this is a monthly chart, okay? So I call this kind of the macro. And we've broken through this 200 period moving average, so 200 month. Now you can see we've got a nice trend line down here. So this is a macro trend line. And that's coming in at about $58, $57. And then we've got good support here. This is a 382 retracement kind of level, so you can see all the price action. So this potential is for this market to move on crude down to this lower end down in here. So next what we want to look for is when it cycles, puts in a low, we can determine that by looking at momentum. So here's the key from a directional standpoint. Here's crude oil, the continuation contract. So these two indicators below, cycle 1, cycle 2, this measures momentum. And when momentum's negative, that's what drives price. So we're still having negative momentum on both momentum indicators, so price is still under pressure to the downside. Now, once we get the momentum cycle 1 and 2 back going above 0, that's a sign that the shift in momentum is starting to go to the upside, and that's what can push a cycle reversal. So if you look back here, the last time we had a really big sell-off, you can kind of see exactly how these momentum indicators work. So back here we had a pretty good sell-off, not as bad as right here, and then we had cycle 1 go above 0, 2 go above 0, and we pretty much had a bottom to this market. So that's what we'll be looking for here going forward. Right now we're not getting that signal. So I hope this helps. Talk to you on my next video.